Welcome to Charts Today. My name is David Linton, and today's edition for Monday, the 19th of June, comes to you from London. And we start by looking at currencies, then stock markets, and last of all, we'll look at some commodities. So the key thing is that the dollar is still just in this, it's in the doldrums a bit, but we are still above the cloud on the short term. Medium term is bearish, so we've got a mixed picture. We have got this new thrust target on the 60-minute chart, and if we can move higher, then that would activate that thrust target. So still looks good long term. Medium term bearish, short term is starting to look a bit more bullish, but we've seen lots of false dawns with this recovery in the dollar. Euro is below the cloud in the short term, long term just struggling to break resistance here, so we are just seeing some downward pressure on the euro, and again a new downside target here, not yet activated. Japanese yen, dollar is looking stronger here, and again sterling, the sterling is actually improving against the dollar, so we are just seeing some sterling strength returning. Bearish, of course, long term on sterling, so that's still hanging over us. Looking at the euro sterling rate, sterling again appreciating a bit here, and against the Swiss franc and the Australian dollar, we're just seeing sterling up as well. So sterling have a better day. Looking at stock markets, the S&P 500 holding on to its bullish trend on the short and medium term charts. It's the Nasdaq that's been worrying us the last week, and we see here we've got this 56.50 level. Say I was saying 56.35 last week, and we've got this same level at about 57.75. So this range is really quite key. So we need to break back above this this high. That's also the cloud level, and that would activate this new upside target. So Nasdaq is coming off in the short term. You need to make sure that we don't see new lows here, and then we might see further sell-off. The Dow looking pretty strong all round, and the Russell 2000 is bullish above the cloud on all three time frames. Did have a bit of a sell-off last week, but that was still holding its bullish trend. The S&P 500 index is up 1/3% this morning, the future, and the Nasdaq E-mini is up 2/3%, so we might well just see the Nasdaq improving. FTSE's up quite strongly this morning, up 1.2%, and we are just seeing that coming back above the cloud here. Not quite yet on the short term, but looking better. And the FTSE 250 up 1.5%, also back above the cloud, looking better as well. And the DAX looking bullish on all three time frames. We've got these short-term targets on the DAX, so we do still have as much as 4% upside on the German market, but quite a lot of volatility just creeping in there in those columns. Nikkei 225, the Japanese market, up 2/3% as well, looking stronger, bullish on all three time frames. Hang Seng up strongly, over 1% up, and looking like a good recovery short term. And the Shanghai Composite also looking better as well. Sensex is starting to move up again, so that's looking better too. And the Australian market recovering, having had a pretty tough time of late. So just really seeing that move down over recent weeks. We're just starting to come out of that cycle. Looking to Brent crude, we're still pretty bearish on crude. We're at this sort of 47 level at the moment. We're just nudging that 46.70 level last week. Below that would be another sell-off. We've got a downside target of 44 on the short-term chart, so it is looking like Brent still has further fall. That's about 7% downside potential. WTI also bearish below the cloud, so still looking pretty bearish there. And the US nat gas future is sitting at 2.95, so we're back below $3 for US gas. Taking a look at copper, copper's looking bullish this morning, short-term transition, so we're seeing some of these commodities actually starting to move. Coffee is down still, bearish on all three charts, so softs are generally not looking great. Cocoa also bearish on all three charts, down quite significantly this morning. The softs are all looking pretty bearish, sugar bearish below the cloud as well. Taking a look at gold, gold is just nudging the 1250 level, so we are pulling right back here on the chart as well. So really in this transition long term where it's looking better, but we're just falling away again short term. But of course what we're seeing here, if we look at the daily pattern, is the higher high, then the higher low, then the slightly higher high. Ideally we need to stay above this sort of 1220 level to put in a new higher low, so just need to keep an eye on that, look out for any new targets. Silver, similar picture, just falling away in the short term. Taking a look at US Treasury yields, 10-year yield is 2.15%. So that's bearish short and medium term. Even though we saw a rise from the rates and the Fed, the market is discounting further rises at the moment. Apple, the most worrying tech stock probably, because we're just nudging new lows here, just taking out that low we saw last week. So Apple's close is a bit of a concern for the market. Google, not so bad. We have that intraday low, but we see that we've made a bit of a recovery. Amazon looking pretty strong after their takeover of Whole Foods, and Facebook coming back as well, looking a bit stronger. Again, the higher low, quite significant. And Microsoft also holding its strength, although we are still below the cloud on most of these tech stocks. So tech is the thing to watch this week. Just keep a close eye on that, and that Apple chart is a little bit worrying. That's it for today. Until tomorrow, happy charting. See you then.